You're welcome back. The home stretch here on Business Morning. It's still earnings season at the financial markets. We're seeing quoted companies filing in their returns results to the authorities at the stock exchange. And one of these is Guaranty Trust Bank, which have reported a half-year profit before tax of 91.3 billion naira, as against 63.1 billion naira reported in the first half of 2015. Now, this figure represents a 44.8% increase in profits for the Tier 1 Nigerian bank. The profit before tax, which stood at 91.3 billion naira, represented a growth of 45% over the 63.1 billion naira recorded in the corresponding period of June 2015. Now, let's take a look at these numbers in details, as I have with me in the studio a banking analyst with Vertical Capital Management, Olalekan Olabodi. Thank you so much for coming on the program.
Thank you.
Now, this seems to be a surprise for investors of Guaranty Trust Bank, customers and clients alike, because of the situation in the banking sector. Why do you think these numbers looked so good at this time?
Okay, Guaranty Trust Bank reported a 45% increase in bottom line, and it's good to note that that was actually largely as a result of the increase in top line they recorded. They recorded a gross earning of about 210 billion, which is the highest they've ever recorded, and this was largely supported by their non-interest income line. And that non-interest income was driven by FX revaluation gains and also supported by fees and commission. And that is largely the reason why the earnings beat our estimate.
It's very interesting to know that the bank, like you mentioned, the non-interest revenue, which increased to 98.8 billion naira. Does this show that attention is moving away from the conventional way of making profit? It seems that they're moving away from the fact that they have to depend on government, on public spending, government expenditure to make money, because the point has been that banks rely on public funds to do business.
Okay, to note that the banking sector has been pressured in terms of top line in recent times. They are largely, or their main source of revenue is usually the interest income line, which is actually from giving out loans to customers. But we've seen that in recent times, a lot of banks have been slightly, slightly cut back their loan growth, largely because of the economic environment, and they've actually focused on, just keeping their portfolio as safe as possible. Now, the reason why we had that kind of huge income from non-interest income, as I said earlier, was because of the FX transaction. If you recall that the FX market used to trade around the 199, 197 levels in the interbank and the CBN window. But at the end of Q2, which is at the end of H1, rates got to as high as 280. Now, for banks that were long the dollar means that they have more dollar exposure in terms of assets than liability. Now, if I have $1,000 in my account, and for one reason or the other, the naira depreciates against the dollar, from the 200 level where the dollar was trading before, it means that I was supposed to have about 200,000 naira. But if it is now 280, it means rather than the 200,000 naira I'm supposed to have, and I have 280,000 naira. And that's where the gain came from. They were long the dollar and they made money from the depreciation of the naira.
And will this impact future income?
We actually don't expect this to...
not just for GT Bank,
yes.
Other banking companies as well.
And to say this, this is not a trend we just noticed in GT Bank alone. It's a trend that we have observed across all other banks, apart from Zenith Bank. Most of the banks that have reported their results to date have reported very strong FX revaluation gains. So we expect it to persist, particularly in Q3, because if you look at where the interbank market was at the end of H1 and where it is now, at the end of H1 it was around the 280 levels. Where it is now, it's probably around maybe 310, 315, depending on the day you check it. So we've seen another form of depreciation, maybe about 15 to 20% depreciation from H1. So at the end of Q3, we also expect that we are going to see this line item also boost earnings. But as I said earlier on, this is not a sustainable way of making money.
So we're seeing the loan book up, the non-performing loan steady, and the return on average equity. Tell us how this played out for the bank.
Yeah, for the loan, for the assets of the bank, you actually see that, as I mentioned about the devaluation of the currency, you'd actually see that devaluation of the currency supported loan book. In real term, I'm sure that the loan book did not really grow, but because they had a lot of dollar assets, dollar loans, and after the devaluation, we saw this impact their loan portfolio. It also impacted their total asset and their deposits. You see that these three items grew significantly, and it was largely supported by devaluation.
Now, we've seen how much efforts bank directors, management are trying to cut costs. I mean to say. So there's been an improvement in cost efficiency. Does that actually also benefited this bank? Yeah,
one thing you should note is that GT is the most efficient bank in Nigeria. They have a cost-to-income ratio of an average of about 43-44%, depending on when you look at it, compared to the other banking sector. The average banking sector ratio of about 62%. Cost containment is something we've seen across banks. Interest expense has been declining significantly. It was down 9% year on year, and better than what most analysts expected. Also, operating expense had been tapered down significantly, and this is actually good, given the fact that inflation is in strong double digits at the moment, around the 15, 16. And you never know where it's going to be at the end of the month. So we are impressed by the cost containment strategies of the bank.
And that should be expected from other banks as well.
Yeah, that has been seen across the banks that have released their results so far.
Okay. Thank you so much, Olalekan Labode, banking analyst at Vertiva Capital Management. We do appreciate your time with us on the program.
Thank you.